Hello, everyone. I'm Mark Fidelman. Welcome to Kryptonized. Joining me today with a different spin on what we normally do is Graham Moore. We're going to talk about a project of his. Well, I don't even know what it is. He hasn't even told me, but I'm pretty sure it's related to Polymesh. But Graham, before we kick things off, give us a little bit of an intro of yourself and then just jump right in to this project that we're going to talk about.
Sure. Yeah. Thanks, Mark, for having me on. So I'm Graham Moore. I'm the head of tokenization at Polymesh. Polymesh is a layer one blockchain. It's public, but it's a permission blockchain built specifically for regulated assets. So stocks, bonds, derivatives, real estate, all that good stuff. So myself focus mostly on sales and marketing at Polymesh and do a bunch of different things, wear a bunch of different hats.
Enter Polymesh, the Layer 1 institutional-grade blockchain purpose-built for regulated assets. Through key design pillars incorporated directly into the chain's core, Polymesh overcomes the challenges that previous blockchains failed to meet, providing institutions with the confidence they need to engage with tokenization. What exactly are these key pillars? Pillar number 1, governance. It's not uncommon for a blockchain to split into two separate chains, a process known as forking. For tokens backed by real assets, forks create major legal and tax challenges because the assets are now represented on more than one chain. Post-fork, which chain retains the claim to the underlying assets and potentially trillions of dollars? How should you decide which fork will be the source of truth? These kinds of questions are highly disconcerting. But participants don't need to worry with Polymesh because Polymesh offers a forkless architecture, which means there's always one official version of the chain.
Tell us about Polymesh in general. What types of projects are being released on the layer one blockchain?
Yeah, so we're seeing a few. So Polymesh, just to give a bit of background, Polymesh launched October 2021. So we've been alive right now on mainnet for a little over a year and a half. And so, yeah, things have been going well. In terms of assets deployed on Polymesh today, we're at 29 that have been deployed. And so those are completely all across the board. So we've seen people issue bonds. So those are corporate entities. One company that's been on Polymesh for a while now is a company called MarketLend. So MarketLend is an Australian-based debt marketplace. So they take companies, they want, let's say, $1 million or $5 million or $10 million of corporate debt. And then there are people on the other side of the marketplace who want to earn a yield and provide that capital and earn the yield on the debt instrument. So they've been there for a while. There's other companies, a few startups that are raising some equity capital. And then an exciting thing that we've seen a lot of really recently is real estate. So I know there's tons of people talking about real estate, especially being tokenized. And so there's a few companies, and so I wish I could tell you the names. We're under NDA. There's going to be some exciting launches that are happening very soon on Polymesh, but you can think, multifamily apartments. You can think residential. There's a bunch of different companies tackling this from a few different areas. And from a few different angles, but it's mostly, I would say, centered around U.S. real estate. And so what we see from that side of the business for tokenization is there's a lot of people who want access to U.S. real estate who haven't really had the opportunity to get it before. So these are people, in Africa, in the Middle East, in Asia, and they're going, okay, well, I can't open a Charles Schwab account and buy real estate investment trusts on the New York Stock Exchange, and I also don't have $100 million to beat out Blackstone or Starwood on buying an entire apartment complex. But what I can do is I can invest $50, $100, $1,000 into some tokenized real estate where I can own a fraction of the units. So that's one thing we see as being really exciting is that area of real estate. And then finally, I'll touch on one briefly. So there's a very, very large entity that every single person would know. Again, under NDA, we can't speak about it yet, but hopefully we'll be able to very soon. They've issued a carbon credit on Polymesh. So this was a proof of concept that we did with them. Hopefully something that we'll be able to talk about a bit more openly soon. But carbon credits are a really exciting thing for tokenization. The reason being is there doesn't really exist today an established venue where people go to trade and issue carbon credits. And so what we thought about a lot in terms of tokenization, I've been around since 2017 trying to do this stuff, where we said, okay, cool, yeah, we'll tokenize equity and everyone will want to trade it. But competing against the New York Stock Exchange, competing against NASDAQ, that's somewhat difficult. It is fun, but it's hard. It's very,
they have
hard.
liquidation. I'm sorry, they have liquidity.
Exactly.
Right? That's the
exactly right. And so competing against that huge liquidity pool that already exists, those established network effects brokers are already plugged in. Venture capitalists want you to go there after you get your C or D round. That's where they know that they're going to get liquidity. But for carbon credits, where do you go to trade carbon credits? No one really knows. There's no established venue that has serious network effects and serious liquidity yet. So we see that as a pretty exciting place. And similar to real estate, right? Where do you go to trade fractional real estate units? There doesn't really exist an established go-to marketplace.
No, not yet.
Yeah, exactly. With existing
There's
liquidity.
a lot of them competing. A lot of you guys are competing, but nobody. You don't go to one spot. There might be 50.
Correct. Yeah.
And so there's probably 5 real ones.
Yeah, but exactly, right? And so we're still waiting to see where does liquidity start to form around and where do those network effects become very real. And so we see real estate and carbon credits as 2 pretty exciting use cases.
Okay. All right. Very informative. So let's move to a project that you're really excited about, that we can just dive in and just say, hey, this is either unique or this is what everyone should be doing. Real estate, I think everyone should be doing. You'd be crazy not to do it with the liquidity that you get as a limited partner investing in real estate before. I would love to be able to bounce in and out. What if you were in an office fund right now and you can't get out? You're in big trouble here in the US. But it would be nice if you could trade those tokens out.
Yeah, exactly. So a project I'm really excited about. So we actually just announced this yesterday. So luckily I'm able to talk about it. So people can go search Polymesh and BDACS, BDACS. So this is a licensed custodian in South Korea. And so what we just announced is an MOU with them to launch projects associated with K culture. So if anyone's seen Squid Game, people have seen BTS, they've seen Blackpink, they've seen Korea's really taking over in terms of the world of culture right now. And with entertainment, you can't really scroll too far on Netflix without seeing another K drama that you might want to watch. And so we've been talking to them for quite a while now, and we've just announced that MOU that we've signed. And so you can think, you could think fan tokens. You can think owning a piece of a television show. You can think owning a piece of a movie. You can think owning royalty rights.
So
yeah.
So they're giving away equity in the movie. Is that cash flow, or is it just what does that mean? Or is it just like a fan token where?
Yeah, so potentially all of the above, right? And then it's interesting to see how you can take these different concepts of, let's say, owning a royalty stream for a television show. But then on top of that, if you earn X amount of capital through the revenue share agreement, then you get gifted a special NFT, and that gives you the ability to go to the next red carpet gala night where you're going to the sequel. And so all these kinds of things, it's still in the early stages of figuring out exactly what's going to be their first product that they're looking to launch. But really exciting times, and all this stuff is happening on Polymesh.
Wow, interesting. So, I haven't even heard of that, what you've just said, and I do this, almost every day. So that's pretty cool. And you just made that announcement yesterday, which is probably why I haven't heard of it. But what an interesting concept. You can do a lot in the entertainment industry, a lot with gaming already, but in the entertainment industry, it's good to see somebody taking the lead there. I'm surprised it wasn't Hollywood, but wherever it starts, somebody will be right behind them. So what are the technologies besides Polymesh that this project will need in order to succeed? Is just layer one? You've got all the smart contracts, everything that's needed in order to launch, and well, you don't have. Do you operate an exchange as well? Probably not, right?
Yeah. So the interesting thing about Polymesh in terms of smart contracts is you actually don't need smart contracts on Polymesh to create and manage and issue and trade assets. So just to give it a bit of background, so Polymesh was born out of a company called Polymath, which you might be familiar with. So Polymath, yes. we had been around since 2017, and then we kept building all this technology on Ethereum, and we kept talking to banks and custodians and regulators. And everyone kept saying they didn't really like Ethereum for the regulated asset use case. So we started building Polymesh, and we said, okay, well, we have the opportunity here to build a blockchain from the ground up just for this one use case. And so Ethereum made certain design decisions early on that just don't really make sense when you start dealing with securities. So one of the things is how tokens are understood by the blockchain layer itself. And so the Ethereum blockchain didn't really understand tokens. And so that's why you had to create the ERC-20 standard. You had to extend that with the ERC-1400 for security tokens, and on and on. But so what happens when you have all these smart contracts that are representing tokens, and then you have smart contracts for things like a whitelist? You might have a smart contract dictating how much volume can be traded for some specific weird securities regulation that might exist. It gets really computationally expensive to do any of this stuff. So one thing we kept running into back in the day was if someone wanted to update their whitelist, which is a list of who can and who cannot hold an asset, it would cost $50 for them to do so. If someone wanted to trade a security token on Ethereum, it would cost $25 to $100. And so we said, okay, well, Polymesh, the blockchain, when we're building it, it needs to understand the concept of tokens, and it needs to understand all of these different kinds of compliance functionality as well. And so to create an asset, to send an asset, to trade an asset, to update who can and who cannot hold something, that costs around pennies on Polymesh as a big contrast. So just talk about smart contracts for a bit, but then who else is involved in this? So I'm sure we'll hear some more names coming very soon. You could think, maybe there's a potential other custodian that's needed. Custody is really, really important. Of course, BDAX is really running that head front and center, but maybe another name might come into the fray at some point. You could also think maybe a broker dealer. And so, who's going to be actually the ones that are selling this? Maybe BDAX acquires a broker dealer license, maybe not, but that's a potential avenue as well. And then I think there was a question, is Polymesh an exchange? It is not. So we do not operate a security token exchange. So really how we like to position ourselves is, we're a blockchain. We have the best layer one blockchain in the world for creating security tokens. Other entities are the licensed entities that do things like creating an exchange, selling assets, custodying assets, whereas we just sit as the layer one blockchain.
Okay, and what about KYC and AML? Do you have any of that built on the Polymesh?
Yeah, so another one of the interesting things about Polymesh, again, talking to banks, talking to custodians for years, and they kept saying, one of the huge things that they kept saying was, okay, if I trade this $100 million bond and I pay $5 in gas fees, what if those $5 go to North Korea? Because that's who mines the block, or now who stakes the block and authors the block, whatever. And so that was a huge concern for them. So on Polymesh, every single user has to pass KYC to onboard onto the chain. And then on top of that, all of the node operators on Polymesh are actually licensed financial entities. So a few of those, we have Binance as a node operator, Huobi is a node operator, Tokenize is a node operator. So a number of these regulated licensed financial entities, they're actually running nodes. And so then when you take this blockchain Polymesh to a bank and you say, okay, so when you're engaging in this public blockchain, it's still permissioned. And so it does have those guardrails. If you do interact with 0x123 and you don't know who they are, at least they've been KYC'd. And when you're paying fees on Polymesh to create assets, to manage assets, they're going to one of these, at this point, 17 entities. They're not going to North Korea. And so that gives them a lot more comfort in using blockchain technology, where in the past, they've just kind of said, we can't use public chains for these reasons. And so we're giving them a lot more comfort with that.
Yeah, it's definitely a dedicated chain. It's what's needed in the space. How would you, before we wrap things up, how would you compare like somebody taking a security token public on Polymesh versus Ethereum? And some of the ERC, I think they got ERC 1400 and they have ERC 6348. These are very specific to securitized assets on Ethereum, but the gas fees are high. Well, how do you compare the two?
Yeah, I would compare Polymesh, and so our team created ERC 1400. We spearheaded it. We got all the securities lawyers in the same room. We got all the custodians in the same room, all the banks, all the former SEC lawyers. And we said, what needs to happen on Ethereum for security tokens to take off? And then we developed ERC 1400, also in collaboration with Fabian Vogelsteller, who's the author of ERC 20. And so, we were the pioneers in the space. And as we kept building ERC 1400, we just said, what? ERC 1400 is great in terms of the concepts and the ideas behind it and what needs to happen from, whitelisting, from ensuring that only party A and party B can transact if someone has allowed them to, all that good stuff. But we really just took it one step further and said, let's stop worrying about kind of the secondary layer of how to do smart contracts to enable security tokens, and let's worry about how to do a blockchain for security tokens. And so really, the difference is a big one is cost, and then a big one is complexity as well. So it's a lot more simple to issue an asset on Polymesh because the blockchain itself understands assets. You can go to a simple tool that we have, we call it the Polymesh app. You can click some buttons and you can deploy a security token and you can change all your functionality requirements. Another big one is how attestations work on Polymesh. So on Ethereum, the whitelist smart contracts are, well, again, very computationally expensive. And then we've figured out a better way to do that with something called attestations. So what the issuer of an asset does now, or one of their parties like a KYC provider or broker dealer, they can tag assets as saying, okay, this one is Mark, this one is Graham, this one's in the US, this one is in Canada or wherever, this one's accredited, this one's not. And so the system of attestations creates a much better system that allows more and more assets to be held by more and more people, where the issuer might not even know them at some point in time, but they just trust Jumio's KYC process, or they just trust JP Morgan's KYC process. And they've created these attestations for these other potential investors. So we think that's going to help a lot with liquidity down the road as well.
So you whitelist, let's say I'm an accredited investor, you whitelist me, and no matter what I invest in, as long as it's on your blockchain, I don't have to go through that ridiculous process again?
It's actually different from that. So the reason being, I wish that's how it worked, but sadly, securities regulators wouldn't be. It's securities regulations, right? That is really how it works. KYC and AML.
But if you're the custodian that says I've gone through the process, here's who it is, then I should be able to just piggyback on that, right? I mean, maybe you don't want to take on the risk, but
no, exactly. And theory, so I'll say that is how we want it to work, and that's how we expect it to work. I would just caveat that by saying you said we. So Polymesh wouldn't do that, but it would be a custodian that would do that. So a custodian could create these attestations for 10,000 investors, and then they can hold any of these 500 securities. And so we expect that is how it's going to work.
Yeah, let me just speak to everybody who's watching. If you want to create the next billion-dollar company, come up with this whitelisted way where somebody registers once and it applies to any security token, any kind of security that people buy. That's a great business idea. I do it myself, but I'm involved in too many different things, so I'm not going to do it. But there's an idea for somebody, because it would make everything easier too. Because going through this process amongst all the different exchanges and all the different things you got to do, it's crazy. We have to keep doing this. It's like I liken it to, and I don't know why we haven't figured this out either. You go into the doctor's office, and if it's a new doctor, you got to fill out their form. It's the same freaking form at every doctor's, dentist, everything. Every form that's used by these people is almost identical. Very few changes. Why don't we have a centralized form that we could just link to and have people fill out? Same thing with whitelisting. And whitelisting of accredited investors is even harder. I mean, the amount of effort they go into doing it is well beyond what I think they should. When you look at you go to a brokerage account, you're not even doing as much to get to show that you're accredited at some of these Wall Street firms. But anyway, one last thing, and you've been excellent, by the way, very articulate. The predictions for security tokens. Now, I know Polymesh is all in on this. What is it going to take to cross the chasm? If you're familiar with Jeffrey Moore's Crossing the Chasm kind of outlook, what do you think it's going to take for security tokens to do that?
I really think it is one institution that kind of starts to go full board, and they issue, let's say crossing the chasm is, let's say it's $100 billion. I think that starts to get people looking at this. You still talk to people in traditional finance and you say, oh yeah, crypto is a $1 trillion market class. They go, okay, who cares? That's one Apple stock. That's a few meaningful mid-tier companies' equities. They don't care about that. That's not an asset class to them still. But so they are still finally taking a look. And I've been at a few conferences recently where you have BlackRock, you have Bank of America, you've got JP Morgan, you've got all the players there. Yep. And so they're finally starting to come to the table and go, okay, crypto is a real asset class. And I think Larry Fink issued some new exciting comments about tokenization today, or maybe it was the day before or something. Yeah, I think some brand new comments today where he's been pretty positive recently as well. But it's still, it still comes down to, okay, well, what assets are they purchasing? And so for them, it's still, okay, this is really, really technology. We're happy to do some proof of concepts, but where are the real assets that we're going to invest in, that we're going to get excited about? And so I think that's been a big change of our focus over the last 2 years. Is initially we were, okay, great. Yeah, you can tokenize anything. So a farmer in Kenya is going to tokenize some cows, and then anyone can invest in the cows, but then you start talking about that, and it doesn't really bring that many investors because nobody's excited about holding that asset.
Right.
But then you say, okay, well, actually, BlackRock is going to put this technology into their own ecosystem, and we're going to have billions and trillions of dollars of the highest class assets possible. And so once we start seeing, the billions of dollars of real estate, we're going to start seeing those billions of dollars of carbon credits as well. And we really just need that institutional adoption, because that's where the best assets in the world live, is inside these institutions. So we've taken this institutional focus of how do you build a blockchain from the ground up, specifically for institutions to adopt security tokens.
Yeah, I mean, the way I look at it is this. First of all, it's way more than $1 trillion industry. Real estate alone globally is 360 trillion. That's a very big number. And people that are outside the United States, very, very difficult to invest in U.S. real estate. With security tokens, it's very easy. So that just opens up anybody that's watching this, developers, owners, just opens up the world to you, literally. If you do it the correct way in the United States, with the Reg S, you can open up the world. And it's not that hard to have, if you do a Reg S, to have these people invest in your real estate. The SEC only cares about U.S. investors. They don't really care about international. I'll probably get some flack for that, but it's true. Then when you look at just private debt alone, you've talked about securitizing equity. Well, debt is 3 times the size of equity. So why aren't people tokenizing debt? That's huge in itself. BlackRock, Citi, all these people see it. And I think you're right. I think it's going to take one big project or one big developer or one big company like BlackRock to declare, hey, from now on, we're going to tokenize everything. We've done the experiments. We've tested this. This is the path forward, and it's going to get done. I'm trying to push a Grant Cardone into listing some of his properties, because I think that would bring a lot of knowledge to the space. He would push it really hard, and getting somebody like him behind it would be great.
For sure. Yeah. I mean, we've been in closed door meetings with the largest banks in the world, and they've said to us, we will not be first. We want to be second or third.
Yeah.
And so
they all do that.
That's pretty much what everyone is saying. No one wants to be first to the door. They always want to be the second or third and figure out the kinks before the first one. But we're finally starting to see some banks say, you know what? Okay, well, maybe I'll be first, but it's going to be on these conditions. And so we are finally starting to see some movement there. But yeah, exactly. It's once one institution does it and then they talk to their board and they see their stock price go up, because they have this new innovation where they have this new revenue driver and they can cut costs, then that's when everybody starts to pile in. So, it is a matter of when, not if. I think you and I agree on that, and people who are excited about security tokens know that now at this point. But yeah, it is coming.
Yeah, I don't think there's enough public knowledge about it, because, they lump us in with the crypto in general, with meme coins, we're the same kind of discussion, and they couldn't be any different. Yet that's the discussion and that's the perception a lot of people have, that crypto's a scam, right? But security tokens are just the opposite. Couldn't be safer, especially when you whitelist, when you can whitelist your token, and if somebody comes in, hacks it, steals it, you can get it right back. The issuer just cancels it and just reissues it. So I think that discussion's got to be held. I don't even talk about crypto and security tokens kind of in the same breath. I'm always differentiating it. There's a huge fat line between them. Yes, they both deal with distributed ledgers and blockchains, but one's a hell of a lot more secure than the other. But that's just the education that we got to start promoting out there.
Agreed. That's why it's great. We've got shows like yours. They're finally starting to talk about the narrative and in the correct way, where we're revolutionizing the financial system and we're doing it in a regulatory compliant way where actual institutions can get involved. It's not look at this new monkey JPEG, or look at this frog coin. It's look at this amazing piece of real estate, or look at this amazing bond from an actual company that yields the proper coupon. So finally a lot of good channels like what you're doing here, Mark.
All right, Graham, really appreciate you being on. Great perspective, and look forward to future discussions.
Same here. Thanks.
Hey folks, my name is Mark Fidelman. I am the host of Cryptonized, and I have a special tip for you today. It's Tetraguard. You can find it at tetraguard.io. This is the first decentralized ETF consists of Bitcoin, PaxG, and Ethereum. I recommend this. If you just want to get into crypto the easy way and have some solid crypto tokens that are in this particular ETF, then Tetragard is the way to go. Check it out.